Hello traders, the title of the video is U.S. Canadian Dollar online traders. Ask a technical trader to begin the chart analysis. Alright, let's begin the chart analysis of the U.S. Canadian Dollar, the USDCAD. I'm on a monthly chart, by the way. So before we continue, I want to say to traders, there are three things that we need to do all the time if you want to day, swing trade, or position trade. Right? So first thing, for those who are day and swing trading, go to the monthly chart, map out the chart. I will explain to you. So draw a trend line, the horizontal key level, support level. Identify, the inverted head and shoulder chart pattern, the head and shoulder chart pattern. Use the measuring stick, set the target, set the midpoint target. Use market geometry, alright, and draw all the key levels and then map out the chart. The second thing that we will do after we have mapped out the chart, we go to the either daily chart, weekly chart, which time frame you prefer, looking for valid bullish and bearish trading setup on or near one of those key levels. That's the second step. Once we find a valid trading setup, we'll now implement a top-down trading method. Those are the three things that I will be banging on in every video that I'm recording. Map out the chart, right? Find a high probability trading setup on or near one of those key levels, and then implement a different time frame trading method. That's it. Whether you are day trading, swing trading, or position trading, is the same thing, alright? So I'm starting what we call chart analysis. Alright, traders are doing all kind of things when it comes to chart analysis. Where is the price headed? That's the first question to ask. So looking at this chart, we have what we call a round button. Some traders may say it's an inverted head and shoulder chart pattern, but it's a round button, a double round button, okay? When the price starts going down, in one direction, see it went down, and then it goes back to the starting point. So it starts going down, right? So it's a round button. Sometimes it's in fact two round buttons. So one is here, went down, went back to the starting point, and then went down again, and went back to the starting point. You see, so double round button. So where is the price headed? Professional will measure the width of that round button and they project it up like this. That's exactly what they did after the price breaks above the neckline. The neckline is at 12731. You want to have it on your chart and note it down, 12731 if you are trading the US dollar, Canadian dollar, okay? So they project that measuring stick of the depth of that round button and they set the target at 15872. That's the ultimate target. The midpoint target is at 14273. So if somebody is asking where is the price headed, the price is headed to 15872. Midpoint target 14273. And the price did stop at the midpoint target. Can you see that? Stop at the midpoint target at 14273. That is consolidated there. So neckline 12731, ultimate target 15872, midpoint target 14273. Have all those lines on your chart. If you put the measuring stick down again here, which means if the price break below the neckline and start going down, the new midpoint target will be here. So we divide again that measuring stick into two, and if it start going down or in a declining channel, the new midpoint target will be at 11102. 11102. That's the green line right here. So those are the first questions you want to ask yourself. Where is the price headed? Next thing, alright? This is about mapping out the chart, okay? Now we want to draw a trend line and a horizontal key level. All of them. There's one here, connecting this point, low of November 2004, we connect it to the high of December 2008. We draw this trend line on our chart. We leave it there. Don't remove it. Just leave it there. Then again, we draw another trend line connecting this low here. September 2012, we connected to roughly to a low somewhere of September 2018, right? Somewhere there, roughly, just very roughly like this. It's a trend line. So, and then you have that red trend line. Leave it on your chart, okay? So recently, you see that trend line was very useful. The price is bouncing, you see, bouncing on it. See, it's like a rubber band. Went up, back, went up, or pull back, went up, pull back. Now, is it coming back again to the edge of that red trend line? You see, here it did similar thing. It went up to the red line many times. And then from there, phew, bye-bye. Is it going to do the same thing again? It's bouncing again along the red line. So you want to have it also on your chart. All right. Have I said everything that I need to say now? So personally, I'm happy with those trend lines because those are major trend lines. I already talked about the horizontal key levels that I mentioned to you. Where is the price headed? Remember that between a two key level or two trend line, there's another hidden key level. A lot of traders very often will forget that, or they do not react, or they do not train themselves. They are not prepared for those. That's why I haven't drawn all the median line, but I'm aware of those. I've drawn one only between the blue line and the green line. There's a median line at 13449. See, so recently, what was happening is that the price again start bouncing between almost the orange, the yellow line 13449, and the green one at was it what I said before? 12635 was it what I said? This line here, the neckline, okay, 136, 12683 in that zone. All right, if I'm a bit different, don't worry about it, okay? If what you noted down before is not exactly what I'm saying now, I'm just talking about the zone because I never see the key level, the horizontal key level as a thin line. It's always a zone. It's a buffer zone. All right. So there's a consolidation between the yellow line, you see here. Bam, 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 bam. Now they are starting again there, you can see. Near the yellow line. But as the price is going down from the yellow line recently, you see it touches this one, touches the yellow line. And now they are finding the support on the edge of the red line. So the point I'm making, once you draw the major key level, never forget that always there's a median line between two key levels, even between this yellow line and that one there. It's just something you need to train yourself to be aware of. If you draw the median line now, you'll see, you see. That's where my cursor is, this one. Is this thing here? The median line between that line there and the yellow one. So just train yourself. Like now, you see this one here. Like you see this gray trend line and that red line. Do you know that there's a median line? Did you prepare yourself for that? You should. Just draw it roughly. Dividing it nicely somewhere there. There's a median line there. Just like that. Okay? Just train yourself. Because when the price is going up, you'll be amazed because the computers can recognize the median line. The high frequency traders, okay? All the trading algorithms out there, they are aware of the median line. Even between these two red lines now, okay, if you draw again another median line, you'll be amazed. This is what's going on. Okay, most of the trades that are taken when New York is open are done by the computers. This is what's going on. They know. Because in order to create an algorithm or artificial intelligence for trading purposes, you have to have a formula. The easier formula, median line, key levels. So you go from one key level to the next key level. And between two key levels, there's another key level always. And the computers are reacting to those things. And you want to train yourself, okay, to spot them. And to what are you doing? Remember the drill? Map out the chart, all right, and then find trading setup, and then implement a top-down trading method. So if it's not working for you, you go back to the square one. Am I mapping out my chart correctly? Use pitchfork tool, use market geometry, draw trend line. Where is the price headed? First question. map it out. Am I selecting the most reliable trading setup? So over the year, as you are trading, you will see that some of the trading setups are working more consistently. So what do you work with? You concentrate only on those that are working. Double top, double bottom, inverted head and shoulder chart pattern, head and shoulder chart pattern, all right? Market geometry, the things that are working for you, those are the things that you keep working. You just banging on those doors. Without focus, there is no success. And when you find a trading setup, you work on your ability to use different time frame trading methods. You are trading forex. Remember that apart from the technical analysis, the economy news, we can't escape them. It will be nicer. You remember some days when not too many economy news and you are using technical analysis? You trade from the morning to the evening, you feel like God, isn't it? You just say, oh, what a beautiful day. And then the next day, boom, the volatility starts again. Crazy economy news are all over the place. If it's too much, just come out of it. Come out of it. Go and do something else, all right? So 11 minutes I've been talking to you now, so this is it. U.S. Canadian Dollar online traders ask a technical trader to begin a chart analysis. I have not yet finished. 2 more minutes, all right? Okay. Now that we have mapped it out, okay, I want to remove some line. That's what I was trying to do before. This one. All right? Now that we have mapped it out, we map it out on a monthly chart. Now you can go nicely either weekly chart, daily chart, or even 4-hour time frame or 2-hour time frame. Let's go to the 2-hour time frame, and then you see, all right, it crashed to the yellow line, all right, and now it's there. So you come on any time frame, draw the chart, you see here, violation of market pattern. Those are the biggest trading mistakes. Go to www.dayprotrader.com, check the web page that we titled this. The 6 biggest trading mistakes. You want to know them, and so you can avoid them. Draw your chart. Yeah, like now I'm on a 2-hour time frame. Okay, draw your chart. Yeah. So I know that orange line is a median line of 2 key levels that I've drawn on the monthly chart. It's a nice place to look for trading opportunity if there is one. If there's none, okay. Now, if breaks below it, is it going to retest it and find a resistance and come back down? Or is it going to turn around here from a double bottom chart pattern? But at the end of the day, anytime you change time frame, map out the chart again. Keep your eyes open all the time. Is this something you can do? You can. Train yourself, work on it, develop that habit. It's a good habit. And slowly but gradually, okay, you will start improving. Improving meaning that, okay, you start having lesser losing trend or not big losses, talking about money-wise. So you were losing before big time, you start cutting your losses. Also, the number of your losing trades start going down. That's the first improvement. The improvement can also be start making better decisions, which means you buying at the right time, you selling at the right time, or maybe you start first selling, but it's not perfect. You sell, the price went down, but they take you out. Or you say, all right, I was right that the price should go down. That's an improvement. Then now you're going to improve your ability to time the market correctly so that they do not take you out in working on your risk control and so on. So all in all, we have mapped out the chart. Now, is there a trading setup that we can use at this junction around a specific key level that we have drawn on the, okay, monthly chart? So it breaks below it now. All right, so there we are. Prior to bullish signal above 1, 3, 4. For 9, prior to bearish signal below it, we will see it's now retesting this high here, sitting on it. All right, so we just wait until we see a trading setup. So like now you see on the daily chart, say, oh, George is retesting prior high. It's a bullish setup. Okay, good. Wait for the signal. If there is no signal, don't do anything. All right, don't do anything. That's it. Trading is sometimes doing nothing. There's no signal, don't do anything yet. Wait for a signal. If there is a signal, now go to the entry time frame, control the risk, check the economy news, and safely enter. Sometimes you may see a reliable trading setup, the signal will be fired, and when it comes to entry, you may just leave it and say, "Oh, I'm not getting into this market. It's too volatile. It's too much people being very erratic all over the place. I'm not into this," and you just walk away. Though there was a trading setup, a signal, when it comes to enter that day, you didn't like it. All right. If you have any question or suggestion, please put it in the comment section, and in due course, I will be recording another video to answer your specific question. If this video has been useful to you, please let us know by giving us a beautiful thumbs up. If you dislike it, be sure to mark it down. If you think it's an essential tutorial, feel free to share with your friend on Google+, Twitter, Facebook, and Tumblr. Sometimes I post video first on Facebook. My Facebook page is a stochastic-market. Subscribe to our YouTube channel. Our YouTube channel is 24 Forex Trader. Be sure to click on the notification bell, so when we are about to live stream a pre-recorded video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders, talking about U.S. Canadian Dollar online traders. Ask a technical trader to begin the chart analysis. Remember the trick step. Map out the chart, find a trading setup, and implement a different time frame trading method. Thank you for watching. Happy New Year to you, and I will speak to you soon.